Welcome to this first edition of ipushpull's Commodity Technology podcast. My name is Andrew Capewell. I am the head of product here at ipushpull. I recently joined a month ago after spending 12 years at Trayport in various product roles, overseeing everything from their aggregation platform, their broker matching technology, and some of the cool tools in emerging markets, particularly in the carbon and US energy space.
My name is Robert Kingham, and I'm previously worked for ICE for the last just under 13 years, and I've recently joined ipushpull on the sales and technology side. I've spent over a decade in commodities and energy before moving to equity derivatives and working on a number of different technology projects for those markets. So in terms of what we want to discuss on the podcast is essentially where we think or what we know is happening in the commodity space, what technology is coming in, what technology is probably going out, and where we think the market's going, and actually how we think push-pull can help customers and from various types, from brokers to traders to exchanges, facilitate better markets.
Yeah, I think one thing that's always interesting is when you talk to people who aren't necessarily aware of how commodity markets work, or maybe they know how the concept of some equity markets, and they're used to seeing a Bloomberg screen on TV or whatever. And they think about, there's prices moving around all the time, and people talking peak per seconds and all the rest of it. But then a lot of the commodity markets that you talk to, people are still using a piece of paper and a telephone on a desk as their primary technical resource in order to broker and to trade those numbers.
Yeah, exactly. I was actually speaking to a customer yesterday who was sitting between 5 or 6 different traders on the ops side. And he was essentially listening to 5 different conversations, and he ran most of that with a piece of paper. So yeah, completely ripe for change and to be more efficient. And yeah, I think there's a lot of tools out there, either from push-pull or from other providers that can really actually make people more efficient and make things a lot less manual than they are right now.
So why do you think the change hasn't come fast? These tools for electronic trading have existed since the 80s, right? That they see people on big computer terminals and all the rest of it. Back in the 80s, that most traders, you go and see, have got a bank of monitors in front of them. Why do you think the telephone and chat communications tools are still so prevalent in this market? And it's not all just on an exchange being done, hybrid algos, all the rest of it.
Yeah, I think that is an amazing question. And it's an amazing question, because the answer to that is a very vast thing. In terms of why things are done in a certain way, each commodity energy market is actually, I think, needs to be looked at under a bit of a microscope for itself. You can't just generically say, this is how a particular market works. We all know that the carbon market works different from the gas market. The gas market works different from the oil market. And the oil market is vastly different from the soft and agricultural markets. Yeah. So each has to be looked at under a little bit of a lens, a different slight way of looking at things. If you take the commodity markets in terms of soft and agricultural markets, that is essentially has an incumbent exchange that kind of has most of those markets. It's very much electronic, but there's still everything goes through brokers, a bit of a gentleman's market, still done in a certain way. It really depends on the types of participants that you have in each market. And some markets, as you know, in terms of energy, commodities, they are for the hedges of that particular market. Some markets, you're having hedge funds and you've got banks, you've got trading houses, prop houses in. They're a little bit more advanced. And so it really has sort of a fragmentation of different types of people, and they're all armed with different types of tech, whether that be a telephone or a chat or a high frequency firm. It can all vary depending on market to market.
Yeah. I think there's still a lot of human scale in a lot of these markets in terms of that people are doing business with other people. Some of the contracts are so different and complex, and there's a lot of movement around them that you can't just have one size fits all. You can't just have an exchange with a high frequency trading sat on every single one. It works in some markets where it needs to be fast and it makes sense to be completely digital, but then there's other markets where there's huge deal going on, take, a couple of days to sort out or to get to agreement on. Yeah. The broker needs to work the pennies on the pound.
Yeah, you're absolutely right. So in terms of the human touch, when I first started an exchange, 13 years ago, everyone who was there essentially said the broker market will be dead in 10 years. And that we're 13 years forward from that date, and the broker market is still thriving.
I think there's more brokers.
And there's more brokers now than there was before. So I think some quarters do not understand or won't understand that people buy from people trade with people. So you're always going to need someone in the middle there to broker or finesse trades. In terms of trading itself, if you're trading in size, you're not going to put size on a screen. But if you're trading in particular markets, long dated markets, or a particular option, you're going to need someone to go and source that liquidity for you, and you're going to need someone to talk to. And actually, having someone on the end of the phone gives most people a bit of comfort rather than potentially clicking a button and fat fingering something. So yeah, brokers and sales traders are vastly important to the markets.
So why don't you talk to me about something that you've seen, a cool thing that you've seen in technology space and commodities, maybe something that like you hadn't thought of when you were at ICE, you thought was really cool, and like maybe like the broker tools, something that you had seen and gone, that's really cool. We should.
Yeah, like in terms of working at the exchange, a lot of our technology was geared up to actually for traders, and it was about liquidity going on a screen, and it was about trading opportunities. So I worked for a communication tool, an incumbent exchange called ICE, and that was sort of geared towards passing technology, looking at communications, passing that, and finding trading opportunities. I think probably on the reverse of that, what wasn't really sort of thought about is there is people typing in onto these chat platforms and distribution platforms, and actually these people probably need to save time too. So in terms of push-pull, I'm very sort of quite excited about some of the stuff they're doing or we're doing. I have to get away from saying they, it's now we.
Yeah.
And yeah, in terms of saving people time and effort, that's for me is very, very cool. So in terms of the communications landscape, a lot of that has become very, very fragmented. So depending on the region that you're in, could very much depend on the type of client that you're talking to and the way that they want to be communicated with. So whether that be on Bloomberg, Refinitiv, ICE Chat, Slack, Teams, Skype, SAP, WeChat. There is so many different ways of communicating with a customer via a chat mechanism that people are struggling. You'd have to be a fighter pilot or an Apache pilot to actually keep up with the amount of dings going off on your desktop. So I think that area is sort of ripe for disruption in terms of allowing people to have a better workflow. So I think that's a cool topic for me. And I was recently out in Asia at APEC, and a lot of customers were saying the same thing. I have all these different customers. I have all these different ways of communicating with them. I need to consolidate that down and just make my tasks very from take it from manual to a bit more automation and save myself time.
Yeah. Yeah. And I think that is 100%. I think the interesting thing you say there about like, you'd have to be a fighter pilot to be able to keep up with all of the data that's coming in. And there's so many cool platforms out there as well that are doing the things with the data to visualization and trying to like deduce down what's interesting, the signal, and what's noise. And kind of there's some really interesting things that people could do, like where, you know, a lot of this information, you see traders are able to read all of this information in their head, and they can see a curve of numbers and the, you know, backwardation or a contango or whatever. But then you had to say there's so many different sources for that data. Well, which one, you know, one's saying backwardation, one's saying contango, with what's the truth here? And then trying to aggregate a lot of that information together, being able to then visually present what the different viewpoints are, all of that data visualization stuff that's really cool. Well, you've got communication, and then you've got the actual structuring of that data. I know, talk to so many houses, institutions where the goal of this data, but then how do they actually consume it in a human readable form? What's interesting, what's not, and how do you kind of determine what sits in there? There's a lot of space there as well. Some cool tools coming out for the last few years.
Yeah, absolutely. And in terms of, it's essentially an arms race, right? So whenever anyone comes out with a cool app, everyone wants that particular app. But then once everyone has it, it's sort of leveled the playing field for everyone. And then it's kind of where you can sort of save time, find time and effort potentially.
So what do you think is the biggest challenge in commodities technology in the next year?
I think in terms of my viewpoint, which is more on the communication side of things, post-COVID, a lot of trading, or not most trading, sort of good high 80-90% of trading in OTC world is done on a chat, right? And also, it's not just COVID; it's a generational gap. Whereas you've had people on the phones previously who like that human connection. I think most people in sort of their 20s, 30s, if someone gives them a call, they're afraid to pick up their phone, right? They would prefer to be getting a WhatsApp or a communication message. So post-COVID, the type of person people are now, humans that we are now, we like to have that sort of like slightly standoffish way of communicating.
Yeah.
And I think trading is no different from that. Yeah, and I think that the problem that stems with that is the sheer volume of different communication tools there are. So that's very, very fragmented.
Yeah.
Also,
what sort of challenges does the fragmentation lead to for a broker or a trader? Why is that a problem?
Yeah. So I think it's more from a broker or a sales trader point of view. You could have 200 customers and they're on 7 different venues when it comes to communicating.
Yeah.
So if you're a broker, just physically being able to type out to 7 different chats is a major issue. Like your job is finding liquidity, right? And you're taking a huge amount of your day, hours and hours and hours of your day, trying to find liquidity via a different mechanism.
Mm-hmm.
So ideally, you need to consolidate that down and save as much time as you can, because you want to be able to service your clients very, very quickly. And also, most people who probably do that will likely burn out over a period of time. From a trader's point of view, I think traders have a bit more power. They can narrow the communication that they have. But in turn, in having everything on a chat, in turn has its own problems, because if you have a high volume of brokers or a high volume of counterparties, having a chat, again, it's the firefighter mentality. You're seeing a lot of information in lots of different sort of screens. And again, that needs to be consolidated down. Ideally, if you're trading, you want to parse that or recognize that information, and you want to be able to blend that in or enrich that with your own data so that you can actually make viable trading decisions.
I mean, you said it's exactly that, right? I think I was talking to a trader in a power market not so long ago who was saying that, they're buying whilst they're paying attention to a chat in a market. Yeah, but they've got another job. They're not just 100% being able to focus on that market all day long. They've got other stuff to do. They've got a meeting. They've got other people management to do, all the rest of it. They come back to their desk. Their market's completely on a particular chat platform.
Yeah.
And they then have to go and catch up. Where's the market been? What's it done? Maybe they have to ask a broker, well, can you just give me a summary of what's just happened? The broker's like, oh, mate, I'm busy. I've got other things to do. Why ain't bothering me with I'm not a graph leaker for you.
Yeah.
The broker obviously said, yes, sir, I'll do that. But there's tools out there that could fix that problem.
Yeah.
And it's just about trying to pair up the right problems to the right market. And I think it's very, as I say, very specific. Chat platform they use, how high grip, digital versus on the screen it is, all the rest of it. It's all about pairing up with the right tool for the right job in each market. And just going into every commodity market with a one size fits all it doesn't particularly work. A lot of people have tried it, and a lot of people have seen a bit, every market needs a bit of a different touch. And I think then you really need to understand that you're trading, or you try and put that thing on to before you roll in and say, here it is, lads.
Yeah, absolutely. And just the example you gave, again, I was on a call yesterday with a US trading house. And again, they were having multiple conversations going on at the same time. Everyone who's obviously in the market probably knows the term broker ear, but broker ear can only be so good when there's so many conversations going around. So I had a client yesterday that was having a 500 lot order sitting in his chat for 4 hours because he has 4 or 5 different chat systems, and he has the voice box going as well. Yeah. So those little missed opportunities or that little bit of bad service, right, can really kind of affect your business. Yeah. It might not have, he might have lost $500 on that order, but if that happens daily, then that can really, really mount up to
at some point the trader will pull the line.
Yeah, absolutely. Absolutely. So I think I am very excited about some of the stuff that particularly push-pull could do. And I've seen some other applications that can do some other quite cool things. And I think the next couple of years is going to be quite exciting for commodity markets, and particularly for position that ipushpull are in.
What about the control of that and of that data, and how people and maintain they've got all of this data coming, and how do they control where it goes and who sees it and all the rest of it? 'Cause you start putting it into a platform or a screen, and then all of a sudden, where does it go?
That is again, one of the biggest pain points. I think a lot of people are having this realization now is you may have had technology that just works. Okay. And it fits your purpose for the last few years, but suddenly it's dawning on people that, hold on, I'm using a vendor for this particular reason. I'm sending data over that system, or data is being sent to me. But actually, where is that data going? And it's not until you look into the nitty gritty of your contracts that you actually notice that these vendors potentially are using your data, or they're harvesting your data and then selling it on. So that question comes to me a lot about, and how people can take back control really of what they're doing. And as part of that, again, like, I don't want to keep pushing ipushpull, but ipushpull can essentially give you data distribution, but actually can really allow you to manage where that's going. You know who it's going to, you know what access levels they've got, and you know how they're using the data, which I think is very, very key. Particularly if you have a niche market, or if you're very strong in your particular market, then you want to protect that data that you're giving out. And I think that's very, very important. So I'm very pleased that someone like Pushpull can handle that.
Yeah. Cool. And then I suppose moving on to the crux of what we're going to talk about as well, in terms of WhatsApp. I think the how much WhatsApp is used by commodity markets and commodity traders still. I think it probably alarmed a lot of people to think about WhatsApp.
I think you're right. If we were sitting in the US, I think that the view of WhatsApp is slightly distorted depending on what part of the world you're living in, and also it depends on the size of your shop, your company.
Yeah.
So when I was at the exchange, the use of WhatsApp was obviously like frowned upon in terms of an official way of communicating for trading. And there's obviously been a lot of things in the news with various banks getting these huge fines. But a lot of that was down to the personal usage of WhatsApp. And whereas you can use WhatsApp if you're a small, medium-sized player, you're in Asia, you're in Europe. If obviously you're compliant and you're recording those logs and you're utilizing that data for sort of regulatory purposes. So I think there's a lot of noise when it comes to the use of WhatsApp. So yeah, we are seeing, I think, the growing of WhatsApp to be used in commodity and financial markets. And from my sort of travels, I've seen, that's just growing. And it's.
And why do you think WhatsApp over, there are other that feel more like business or tradery appropriate chat platforms? Why is WhatsApp so heavily used, or why is it relied on? Why is it growing? What's the advantage of using WhatsApp over other chat platforms are available?
Yeah, absolutely. So, well, people are people. And as I said earlier on, people will buy from people. But people are human beings. And what do you use every day? For the billion people on the planet that have WhatsApp, they're going to use WhatsApp. So they like the look and feel of it. They're very much used to it. It's on the go. It's on their phone. Most people spend, I don't know, I think I had a little ding on my phone the other day telling me I'd spent average of 7 hours on my phone, which was rather embarrassing last week. But people do spend a lot of time on their phone. And particularly when you have markets from Asia to Europe, people are leaving the office, they're going home, they want to check their positions, they want to check their trades. They're going to be communicating by the one thing that they use in their daily life, which is WhatsApp.
Yeah.
So from their point of view, as long as they can get that auditable and compliant, they shouldn't really have a problem.
Yeah.
I actually have sort of seen a bigger trend going more and more to WhatsApp, even though that you've seen a lot of noise out of the US about these fines and things like that.
And I suppose you circle back to the control of data piece. Meta goes to great lengths to explain how it is end-to-end encrypted. And the irony, right, is that Telegram that you have to turn that feature on if you want end-to-end encryption in Telegram to make sure it actually works. Each user involved in the conversation has to turn it on. Whereas WhatsApp, you can't turn it off. It's not possible to turn it off. And so, or a firm knows the conversation you're having on WhatsApp is between you and any of the participants that are in that chat group or the individual conversation versus maybe other platforms where you don't necessarily have the same sense of security on that data.
Yeah. And obviously any of these incumbent chat platforms are going to be secure. Otherwise they wouldn't be used, but it's not the security is the problem, is the fact that probably if you look through your EULA or your terms and conditions, your data most likely is going to be used in some fashion, particularly if anything is free or supposedly free, then you are the product essentially. So I think more people in the last few years have become very aware, particularly in the market itself or in their personal life, that any service that you use and has terms and conditions, and particularly if it's free or if it's low cost, more than likely you are going to be the product. So I think commodity participants, energy participants, becoming sort of very aware that suddenly they may be the product, and they really want to sort of take back control where the data is coming from or going to.
It reminds me of that recent story around the home entertainment provider on someone providing a service, had a T's and C's for a free trial, and then subsequently someone had an allergic reaction at one of their on-premise venues. And we out that it was absolutely fine because they signed away their life when they applied for they had the free trial that they didn't even pay for. Sitting at home with their TV remote.
Yeah, absolutely. Like, how many of us have gone on, used the service and just scrolled for a EULA and just ticked the box, and you've had no idea what you're signing up to? Yeah. And unfortunately, that's why it's good to have your compliance and legal people look through your terms and conditions, your EULAs, and actually check any of these sort of perpetual documents, these live documents, actually see what you're really signing up to.
Fair enough. And then I suppose the other side of that coin is how does someone get value out of those conversations for their own their own firm's use? How do you automate that? What are the challenges there?
So that's a very good question. So something like obviously we ipushpull, we work with all these different chat providers. Someone like for a WhatsApp, there are a couple of different ways sort of to access that data. You have the official route and a slightly non-official route. The problems can, for each chat platform, is that each chat platform will have slightly different functionality. So what we will do when we're talking to a customer is sort of go through the options, whether that may be Teams, Slack or WhatsApp or WeChat or Telegram, and we'll go through what's available, what's not, because obviously perception about what you actually can do and not do with data can be slightly different. So we just go through sort of how each one will work and what we can do with that.
Yeah. And again, on a market specific or even customer specific basis, right? That's the beauty of it. Is that it's not a one size fits all solution. It is tailorable to each individual customer's problem and journey.
Yeah, absolutely. Yeah. In terms of a trader, if they're doing a very sort of vanilla market, actually parsing that data or extracting that data can be quite easy. Mm-hmm. If it's something that's a little bit more complex, then we have different techniques for doing that. So yeah, it's not one size fits all. It's probably like 4 sizes that we can apply to different types of traders and different types of markets.
And then in terms of the insights and analytics that you have seen people get from that chat data, like what's some of the interesting stuff you've seen people do with it? What is the possibilities are endless, and I'm sure people's imaginations are going to be far more powerful, but there must be something cool things to do with it.
Yeah, my imagination is quite strong, to be honest. So, but we won't go into that one here. In terms of what you can do from a trading point of view, if you could just pass the data that you're receiving from your counterparties, you can quickly price that up and return prices. So you're actually giving yourself a bit of an edge. Obviously, there are people out there who've been doing that for a long, long time. So that's sort of the big market makers, for example, they've built some of this technology themselves, and that's why they can price so fast. If you're a brokerage or a bank, you want to be able to see which counterparty is actually responding to an RFQ in a quick and timely manner. Which broker is actually, if you're a broking shop, you want to see who's your best broker. Yeah, okay, this guy or this person here, this girl might be bringing in a lot of but actually, and you want to see how speedy they are, what times they're working to. You can check all sorts of different things. So yeah, I've seen people from banks to brokers start doing things like that, so they can really service their clients better. Yeah, because there's always an opinion of what we think is happening, but until you actually
of the vibe,
the vibe that you get. But in terms of, if you actually get the data, you can actually see the trends. So a lot of people are interested in looking at that sort of trend information and that interaction information to sort of change their business and drive revenue.
Yeah, one thing I've always been struck by in commodity markets is what my background is, but I'm sure it's a problem in the wider broker market. There's always been that insights, that CRM in sales. You're perfectly used to putting things into a CRM system to be able to really understand and get, understand what the value of each conversation, each touch point was.
Yeah.
But in broking, it almost seems like the fear that people are just watching them, but the value doesn't ever seem to run back to the broker of being able to get the value of they put a number out to 16 traders and 81 of them responding.
Yeah.
That guy never talks to people once, but he's all afternoon, he's chatting away to you, giving you a price tag, giving you the information you need. And so that's the person that you should spend your time and then put on, and when you should spend your time and then put on those different individuals based on what makes them tick and what kind of profile they fit.
Yeah, absolutely. So again, on a brokerage side, people are going to have a particular viewpoint from their perception, and it's all about relationships. So I can understand how particularly brokerages or brokers, per se, would see technology that was kind of invasive. They would see that as, oh my God, that's a negative thing because my whole business is about relationships. But actually, from our point of view, we're agnostic and we're building technology actually for brokers, right? So we're trying to essentially give them a tool that gives them a slightly different perception, gives them sort of data that can actually give them a better decision making, and they don't have to be afraid of it. I think what has sort of happened in the last decade is exchanges or vendors who are building tools, and it's to almost work against the brokers and take liquidity away from the brokers and move it to a clog business or a screen business. So a lot of brokers will probably have sort of a slightly skewed perception of technology.
Yeah.
And I think actually now what you're seeing providers, not just ipushpull, but other providers actually building tools that were going to help brokers.
Yeah. Yeah. So I've got to end. I think we're running out of time. We've bored everyone to death for a while, but I've got one question, and that you have made a similar journey to me in the past in terms of moving from a commodities focus and really understanding a commodities market and then moving into an equities market. And as part of my role at ipushpull, we're kind of market agnostic.
Yeah.
And I'm really excited by that because it opens up such a wide breadth of opportunity for me to go and learn all new spaces and all the rest of it. But what would you say is like the biggest difference between the two spaces that you didn't foresee before you started that journey of learning that new space?
This is a very good question. I think the setups are slightly different, right? So in terms of involvement, whereas you still had in commodity markets and oil markets, energy markets over the last decade, that sort of sell side, buy side setup has kind of largely disappeared. It's more of an all-to-all market. Everyone talks to each other. In equity derivatives, you still have that sell side, buy side setup. But actually, I think it's starting to change like this. It is actually opening up a little bit, and you're starting to see particularly bank traders moving to the buy side, and they want to maintain their broker relationships. So you're starting to see people still communicating with each other directly. So I think that trend will continue, and eventually that will become probably an all-to-all market, similarly to commodities and energy. But actually, funny enough, the technology in equity derivatives is probably a bit more advanced than it is in the commodity space. So the setup's very different. But again, I think these all different markets could probably learn different lessons from each other.
And then I suppose one last final question, the obvious follow-up to that is, so what cool thing do you think the commodities market could learn from equities derivatives?
Yeah, there's some really cool tools out in equity derivatives. I probably don't want to go into it now. But
we'll get it. We'll just learn off that question. We'll talk about it.
Yeah, we'll cut that one then.
All right. Well, Rob, thanks for joining us on this first version of first iteration of the commodities podcast that ipushpull, and we will go back soon.
Yeah, pleasure.